For a check on the market impact, let's bring in Stephanie Link. Steph, we're going to switch gears entirely and try to figure out exactly what's happening with yields. You've been thinking about it, writing about it a lot. I think that, moving higher gradually, not ttoo hot, doing it in a nice stepwise fashion would be fine, even if we ended up at the same place, because it indicates that the Fed has been successful, as you point out, in stimulating the economy.
Yeah, and good morning, Joe. It's good to see you. Yeah, I kind of look at this last couple of weeks as looking at rates and rotation, right? And rates going up for the right reasons is very good, very positive. It's something that we should embrace, not be something that we're afraid of. I look at all of the economic data that over the last couple of weeks, so incredibly impressive. I mean, industrial production is going to rise 9%. Retail sales, the control group, is up almost 12%, and that goes right into GDP. Housing permits are at a 15-year high. Last week, durable goods, I think I mentioned that I fell off my chair when I saw the aircraft orders up 63% year over year, but also technology and computers were up 20%. So it wasn't just kind of this lumpiness, if you will, in aircraft orders. And then, of course, personal income up 10% month over month. And the savings rate now at 20.5%. We know historically that's 5%. So all of these things and many more data points as well in terms of the economy are the reasons that rates are rising. And so I look at the speed. We just want to make sure it doesn't go too crazy on us. And I'm glad we've seen a settling down, quite frankly. But I think 1.6% last week intraday on the 10-year. That's still lower than the 2% pre-pandemic level that we were at. And so I think we can handle higher rates. Just watch the speed, as I mentioned, and look at the economic data. All the stimulus it's working, Joe. It's just working.
What if we did have a $15 minimum wage? Somehow they get that through. What if you started to see some indications that the recent inflation hot numbers weren't just outliers? What if it started looking like rates were moving based on inflationary fears? When do we cross that line where it becomes a negative?
Well, I look at technology and I look at CapEx, and that's going to lead to better productivity. And so to me, that is the governor on rates, quite frankly. So look, I'm looking at all the commodity prices and them escalating, right? Aluminum, steel, iron ore, copper, they're all up huge. But again, I think the productivity might keep it a little bit one-sided, if you will, in terms of where inflation is at. So unit labor costs, Joe, are zero. And that's the leading indicator of inflation. So let's just watch it, right? Let's just watch it. I don't think we're going to get out of control, but we have to see. But for now, I think it's Goldilocks.
Shepard Smith here. Thanks for watching CNBC on YouTube.